Hello and welcome to Business Incorporated live on Channels Television. Here's what's coming up in the next 55 minutes. Diesel prices drop further as Dangote refinery sells at 940 naira per litre for customers buying at least 5 million litres. And Kenya's second-hand clothes imports from China rise by 86% in the first quarter of 2024. An introduction of ZIG, a short for Zimbabwe gold, has led to a 99.95% fall in the Zimbabwe Stock Exchange All-Share Index. And it's great to have you join us. I'm Ladi Williams. Let's get to the stories that set your agenda now. And most of the markets we track here, starting with the oil market, we see oil prices gained after stronger economic data out of Europe, as investors also weigh the potential fallout from any fresh U.S. sanctions on Iran's oil exports, with tensions remaining high. That's in the Middle East. And we're seeing green on the screen there for Brent, up about 0.23%, $87.27 a barrel, getting back closer to that $90 mark there. That's for Brent. And WTI also looking forward to that $85 mark, up 0.27%. So we're seeing positive sentiments today. You know, yesterday we did see the oil markets actually drop. So we're seeing, release of the U.S. GDP, gross domestic product numbers. That's for coming on Thursday, and we're going to see how that's going to drive sentiment. Everyone wants to know, when is the U.S. Fed going to cut rates, in 2024? Is that even going to be a rate cut, at this point? So we're looking forward to that GDP number from the U.S. Let's look at the metals market now. Gold prices fell today. That's lowest in more than 2 weeks on easing concerns of an escalation in the Middle East as investors booked profits at this time. But it's had a monster run, at this point, talking about the safe haven metal. That's gold, $2,310. I remember when I was reporting about $1,600 per ounce. That was sometime early last year, but this is quite a big rally there we're seeing for gold. Silver has not left out, down 1.74%, $26.77 per ounce. And palladium, that's down about 1%, 0.95, $1,006 per ounce. Holding on to that $1,000 level. Who knows if that's going to give way at some point. Let's get to some other stories now. The Lagos Chamber of Commerce and Industry, along with other stakeholders in the real sector, have paid a courtesy visit to the Vice President, Ibrahim Shatima, to share their perspective on macroeconomic issues as it borders on their operations, as well as the impact of subsidy removal and ongoing reforms. The president of LCCI, Mr. Gabriel Dahosa, who led the delegation, believes that it was a fruitful meeting that has the promise of bringing new ideas shared into the running of the economy.
The fundamental changes that have come with the removal of subsidy, the unification of the currency, has opened up a lot of opportunities, which we believe that the government can fast track with a couple of policies and measures that we have discussed with the Vice President, and we have profiled some solutions which can be implemented. And we have been assured by the Vice President that a couple of these are practical, they are doable, and he intends to consult with the President and work with us to chart the pace of implementation. The Vice President had assured us that we will continue this conversation on how best to implement these policies across various sectors of the economy: agriculture, oil and gas, manufacturing, and then the very important information and communication technology industry, which is creating a lot of jobs for young people.
All right, and we did say that Dangote Petroleum Refinery has again announced a further reduction in the price of both diesel and aviation fuel. That's to $940 and $980 per liter, respectively. And this coming on the wake of its widely celebrated price reduction. We did get that price reduction of 1,000 naira per liter. So this is a further drop, and 940 naira. That's applicable to customers buying 5 million liters and above from the refinery, while the price of 970 for aviation fuels for customers buying 1 million liters and above. So there we have it. Another crash there for the price of diesel. Definitely, I believe that's good for manufacturers and Nigerians at this time. But let's get to our first conversation now. According to the Ministry of Finance, the World Bank will in June 2024 consider and give final approval to Nigeria's $2.25 billion loan request. The loan comprises about a $1.5 billion loan in development policy financing and another $750 million in program for result financing. Well, let's drill down more on Nigeria's debt level. Joining us now is Mr. N940, co-managing partner at Commercial Partners, joining me via Zoom. Great to have you on the show. Good afternoon.
Good afternoon. Great to be here. Thank you.
Fantastic. So before we get into that, we're seeing the Dangote refinery again impacting the price of diesel at this time is now sub 1,000 naira per liter. How are you seeing this? And definitely looks like good news for manufacturers.
Definitely. Not just for manufacturers, but for Nigerians as a whole, because it's going to directly impact inflation. You have most middle-class homes that have diesel-run generators, middle class to high, to the high end of the set of the individuals, right, who all have diesel generators at home. So if you look at that, you're going to say, well, all these people are going to have to pay less money for diesel or to power their homes, considering how poor power supply has been. So manufacturing sector, which is inflation coming down for homes, for offices, people who all use diesel generators, definitely going to be a big plus for them.
Right. How low do you think these prices, can go? Do you think at some point we might be looking at 500 naira per liter at this rate?
Well, we have to remember that the prices are sort of indexed to what's happening globally with regards to crude oil prices. So for you to get to 500 naira per liter means crude oil prices would have to also come down pretty aggressively alongside major further strengthening of the currency. I don't see the currency strengthening that much to let us get to, say, a 500 naira per liter. That means you're talking about currency getting to maybe about 500 naira or 600 naira to $1. I'm not sure we see that happen this year. Also not sure it's advisable for that to happen, because you most likely start to have huge pressure on the currency all over again.
All right, definitely. But let's switch gears now. Yeah, we've been talking about, what we got last from over the weekend from the IMF World Bank meetings, and definitely it was quite a busy one. And we found out from the federal government that we're getting another loan, and we're chasing at this time. But it's been described as free lunch, just about 1% interest rate. Why do you think the World Bank is giving Nigeria this loan at such a low rate?
Well, that's what concessional financing is all about. You can't get this kind of rates commercially, and you have the World Bank trying to assist certain economies. If you look at the reforms that we've undertaken, looking at even the World Bank and the IMF mentioned it in their reports that came out recently. They're happy with the way things have gone, happy with the monetary policy, and some decisions taken by government, reduction in things like fuel subsidy, increase in taxes, increase in exchange rates. So all of that basically points towards some improvement, expected improvements in the economy. And yes, you will look at it as free lunch, 1% with a 40-year repayment period, 10-year moratorium. It's fantastic. It allows you manage your repayment schedule. And at 1% interest rates, that's, you definitely can't get that anywhere else.
Yeah, definitely quite cheap financing there. But what do you think this money will be spent on? It still has to be paid back at the end of the day.
Yes, ideally you should spend the money to either, bolster your budgetary allocations, or you use it to invest in something that ensures you get returns that would outstrip what you're paying in interest, and also ensure that you can pay back the principal amount borrowed, right? So if you look at the long date tenor of the loan, that definitely means that you should be looking at putting it in infrastructure. So roads or increasing power. I mean, imagine what improving power supply in Nigeria by, say, about 40-50% would do for the economy. If you have that amount of increase in power supply, then you will be able to increase manufacturing output at a lower rates, and also aid them in exporting, which invariably would lead to more dollar revenues coming into the economy and makes it easier for the government to pay back. So major infrastructure type investments that will ensure you reap the benefits that will allow you repay this loan. I mean, definitely not to use it to pay down FX obligations, because that doesn't necessarily bring you the kind of rewards we're talking about.
And looking at debt levels in Africa, we know debt is a major issue right now for major African economies. But aside taking on more loans at this time to help support the budget, what other sources can the federal government look at this time, or even look at developing right now?
Yeah, I mean, it's interesting you mentioned debt, and you talk about debt in Africa as a whole. We've seen a few African countries default on their debt, their Eurobonds of recent. It's going to happen with Ghana, Zambia, Ethiopia. So that tells you that one needs to really be careful with regards to, debt sustainability. But if you look at us in terms of other sources government can develop, I mean, we know that Nigeria's mainstay has been crude oil. We know that government is pushing to try and get us to about 2 million barrels per day from about the 1.3 or thereabouts, or 1.2 million barrels per day that we're at. That means they need to, first of all, tackle insecurity. But we also need to focus on not just crude alone, but begin to diversify the economy. One thing we need to look at, part of what I mentioned earlier, was to help or aid the manufacturing sector to help improve exports. Same thing with agriculture. We need to try and focus on things that we can export and that would help us bring in or grow the foreign reserves. And also look at not just exporting raw materials, but things that we've added value to. I mean, this has been said in time past. You have cocoa, and how much money do you make exporting cocoa versus exporting chocolate, for instance? By the time you go from cocoa to chocolate, you most likely make an additional 40 or 50% in terms of returns. So it makes more sense to export products that you've added value to than just the raw materials alone. So definitely looking at public-private partnerships, or even selling underutilized or non-strategic assets, like we've seen happen in Egypt, can help you bring in, more revenues to the government. Look at refineries that we've been struggling to maintain. So government can always look at selling some of them to reduce the drag that you have on government finances, and then have people who can come in, manage them, optimize value, and start to export, finished petroleum products the same way we expect Dangote refinery to do.
Right, and talking about that Egypt deal with United Arab Emirates to develop a prime stretch of its Mediterranean coast, that's bringing about $35 billion, in investment into Egypt in the next a couple of months or so. But how can Nigeria replicate this exact deal, at this time?
Well, I mean, talk about Egypt is a fantastic deal, I would say. I mean, they've gone into some partnership with Abu Dhabi Sovereign Wealth Fund. So, I mean, we basically say that Egypt more or less has a big brother. So, I mean, it would be great if Nigeria, for instance, could get a big brother who would pay us $24 billion to, for development rights, which is what you've seen in Egypt. So for us, I mean, we start to look at bit of progress made. We've seen some commitments, but we need to start seeing those commitments get actualized. We looked at, there's a $10 billion steel investment expected from India. We have a pending agreement, discussed with Qatar, things like that are important. Those are the kind of things that can help stimulate. Nigeria has a huge coastline. For instance, if Egypt is being paid, for rights to develop their own coastline on the Mediterranean, what stops Nigeria from being able to offer same? For instance, or what stops us from being able to offer things like national theatre and court, people who can come in and help us develop that side of the economy and help with the entertainment sector. So I think we have to look at large-scale type things, large-scale type developments that will stimulate economic growth, create jobs, and also attract investments. One thing that is key is not to have the previous mistakes we've seen with prior governments where people end up going to court. Nigeria signs an agreement, they renege on the agreement, you end up in court. So look at the PNI type transaction, right? Yes, we ruled as a fraud, but we should never even have been in that kind of scenario in the first place. So we need to have agreements properly reviewed so that once we sign, we know it's in the best interest of the country. I'm not going to have another executive come in and try to reverse it. You can imagine Egypt, for instance, coming down 5-10 years down the line, say they're reversing this $24 billion deal, and what kind of repercussions you would have. So we need to be able to do the same, give investors confidence to come into Nigeria, assure them that whatever they sign will be honored by subsequent governments, and right. Try and create a fantastic enabling environment for them.
Right, definitely. We're seeing the president quite busy going around the world trying to get all those investors in and tame some of their nerves at this time. Well, thank you so much. It was great having your perspective. Mr. N940, co-managing partner at Commercial Partners. Thank you so much.
You're welcome.
All right, we'll take a break now. When we come back, we head straight to the markets. Do stay with us. This is Business Incorporated. Welcome back. Well, it's time to get a sense of how your money is performing at intraday in the local bourse and major markets around the world that we track. And we have Willie Bong with the details.
Hi, Laddie.
At this time. Hi, Will.
Yes, the markets are, would I say they're a bit cautious, or they're down with the rain. It's quite,
it's
quite
a
rainy day today, so
everyone
is taking a nap, I think. They're not just out of that sleepy mode yet. So the market is still very sleepy. We're seeing some reds, pockets of red here and there, mostly reds. But I hope that by the close of business, they would have been
so you think investors go to bed when the rain's falling?
Yes, possibly. So that's what we're seeing. So, but we're going to be checking in with the markets, discussing with Ladi. The markets are red, mostly red at intraday. Sentiments are, I say, mostly negative. Well, we're hoping to see that the green pick up much later at the close of business. We see Nigeria's NGX down at intraday. At the time we picked it up, it was marginally down 0.03%. South Africa was the only gainer in the green at intraday, also 0.03% marginally up. Elsewhere, we see Egypt's EGX 30. The Egypt's EGX 30 is down 0.44%. That's not very good. And looking at what analysts are saying regarding the stock market, it says it's going to face a corrective movement towards 26,000 points. And that movement, market participants consider it to be logical. Now, the EGX declined 1.67% during Monday's session. And now, speaking of Monday's session, we see Kenya down in the Monday's session in red territory, and that is no-brainer. We're hoping that market rebounds because we see that shilling declining and is really affecting the stock market in that country. Well, let's check in with it on trading at the fixed income markets. We have Caleb Alimi, is the chief dealer at Providence Bank. He joins us on the show. Good afternoon, Caleb. It's good to have you on the program.
Good afternoon, Will. Thank you for having me.
Let's kick off with system liquidity. Let's see what's going on there. We know it's tight. How tight are we talking about, and how it's impacting sentiments in the fixed income market? I believe you would share that with us.
First and foremost, the market has been very tight, like you rightly mentioned. On Monday, we opened with a negative about 1 trillion. Today, it's improved slightly to about 880 billion, still just about minus 900 billion in the of system liquidity. That has impacted markets, with bearish sentiments. We've seen quite a bit of sell interest across the curve. We've seen the sell interest on treasury bills, especially between the May maturities and the June maturities, very short-dated maturities. The implication of the negative system liquidity is that banks are funding at a very expensive rate overnight, among themselves at around 30.75%. That's quite expensive. And so what you do is to, free up whatever assets that you have. The closer the maturity, the better for you to, sell it off. And that's what we're seeing. We're seeing very sentiment on short-dated treasury bills, May maturities and June maturities.
Now, there's going to be an NTB auction. You've just talked about some short-dated bonds now, which is happening tomorrow, which is Wednesday, where about 142 billion naira worth of papers will be on offer. What are rate expectations, Caleb? Considering the tight system liquidity, what are we looking at here?
A few things. Part of the things we expect, ordinarily, if liquidity remains tight, we expect yields or discount rates to, print a little higher. We've seen that on the 91-day and the 182-day paper, those ones are pretty sticky and pretty stable. The last 91-day closed at 16.24, and the 182 days closed at 17%, while the 1 year closed at 20.7%. However, given where system liquidity is and what's on offer, we expect that the 91 days and the 182 days may remain constant, but the 1 year could, track upwards closer to 21% or slightly over that, depending on how desperate investors are, or if liquidity sort of like improves before the end of today. There is expectations that, there could be the FAC allocations could be paid into the market today, or at least tomorrow. That would also impact liquidity, and it will then determine how, people will bid at the auction.
Now, just speaking of liquidity, speaking of, gains, and, it's more like declines now. It's looking like the world's best performing currency, which is the Naira, which was the best performing currency in April, is taking a breather from its month-long rally. As we're seeing the dollar strengthening and sending chills down the spines of emerging markets from Nigeria as well. And the Naira is seen to be moving from about 1,050 Naira from last week close to about 1,250 Naira this week. What's driving this? What are the major drivers?
Like you mentioned, it's the best performing currency, and because it is best performing is why we're seeing what we call take profit. The Naira has strengthened about 30% over the last, almost a month. It's only natural for the people that provided that liquidity to take some profit. Take, for example, many of the FPIs came into the market around 1617, and then the Naira strengthened to about 1,100, 1,150 or thereabouts. Look at that spread between where they came into the market and where the market is currently. They've already made 30% within 2 months. I think every smart trader knows what to do is to take profit rather than wait for the markets to take out all of that profit. So that's what's happening. It's simply foreign portfolio investors repatriating some of the funds they brought in.
So we're seeing oil prices dipping, and this is, bolstering the dollar because the dollar is really strengthening because the Fed might not be cutting rates anytime soon. Do you think this is going to be a sustained pattern? Do you see the Naira devaluing or declining further in the near term?
More interestingly, the CBN continues to, intervene at the market at different times. Today we understand they're selling to BDCs. And they will probably come to the interbank market at some point, even though, the governor said they don't want to be the highest supplier of dollars to the market. They'll continue to find ways to stimulate foreign investors. This is why we think interest rates in the fixed income space will remain elevated, just so that they can attract, more dollar portfolio investors. So with that sort of supply coming into the market, we don't think the Naira will depreciate too much. It could continue to lose some value, and then at some point, it will become attractive for entry again for more portfolio investors, especially as our interest rates on our, government securities remain elevated.
Okay, I'm still speaking of the government and the plans to, attract more forex into the market. You see that it's planning its maiden foreign currency denominated bond issuance in the month of June, right around the corner. What makes this debut forex bond scheduled for the second quarter different from the regular Euro bonds? I'm sure we would like to know what the difference is and what, interest it holds for investors.
All right, so first off, Euro bonds are dollar-denominated bonds, but they're issued outside your country, which means Nigeria raises an instrument in dollars and it trades it in outside its country, maybe in London or in New York. Those are Euro bonds. However, if Nigeria issues a dollar-denominated bonds that is traded locally, maybe on the NGX, on FMDQ, or on other platforms locally, that becomes a forex bond. And that is what this bond is about. It's the first of its kind, being that to be a dollar bond, but issued locally here in Nigeria. The federal government is targeting, dumb balances of many Nigerians, by offering an attractive means of investment for them to, plug all those idle balances, so to say. And that's what makes this bond different from the Euro bond, and that's what makes it unique. And that's why it's a first of its kind as well.
So what instruments are investors currently trading and what end of the curve as we speak right now? As we speak, what are they trading?
Short end mostly. What banks are trying to do right now is create liquidity. On the other side, other investors are positioning for the primary auction tomorrow. Many of them are interested in the one-year paper because that's where you get the best yield pickup, right? So the yields have been around 26, 27% for a long time. We're expected to still hover around that space. So that's what investors are looking for. So, however, for banks trying to create liquidity, many of us are trading the short end of the curve, the May maturity, just to create liquidity for our obligations.
Okay, thank you so much, Caleb Alimi, Chief Dealer, Providence Bank, for sharing your thoughts on business and corporate. It's good to always have you.
Thank you, Will.
Now let's look at the Middle East markets where major equities traded with positive sentiments. At intraday, Abu Dhabi was up 0.05%. We see Dubai also up at intraday 0.2%. Still within the region, Saudi and Qatari indexes traded up over 0.5%. We see 0.54% and 0.51%. Now let's look at the U.S. markets where we see stock futures and higher, in pre-market trade. In early trade today, the S&P snapped the 6-day losing streak boosted by a rebound in tech stocks. We see the S&P 0.08% up. Dow Jones is up 0.07%. Nasdaq futures 0.14% up. Now we're seeing these markets really boosting, and we're seeing Tesla also going to be issuing reporting its earnings today, and investors are going to be seeing what's going to be coming out from that stock because the stock price is already down more than 40% as we speak. And we'll just look at Asia markets right now and see very quickly what's happening in the Asian market. Nikkei 225 in Japan is up 0.3%. It's closed trade for Tuesday very well in the green. The Kospi in South Korea is down 0.24%. Hang Seng Tech Index, that's in outside China, shows is 1.92% up, nearly 2% up. We see mainland China, Shanghai Composite, let's look at that quickly, is down 0.74%. And we see the S&P ASX 200 in Australia, 0.45% up. Markets are not doing badly in that region, especially from tech, the gains from Monday's in the tech sector on rebound on Wall Street. Investors are assessing this flash business activity and they're just, buying into the stock. So, Ladi, with all this happening in these markets right now, it's kind of like this is the right time. You talked about Tesla. This is the right time for investors to come into Tesla. I think this might be the right time because speaking from what analysts are saying, we were discussing earlier, yes, for the year. So this is probably the right moment to get into Tesla. But
you don't want to catch a falling knife at this point.
You don't want to catch a falling knife.
You don't know where the bottom will be at this point.
No risk, no gain, laddie.
Exactly. And Justin, Caleb actually confirmed that while we're talking to him. Okay. That the CBN is resuming Forex sales to BDCs at 1,021 naira, per dollar, at this time. Because we've already been getting complaints, from friends around me talking about the naira is weakening again, the naira is weakening again. But I guess this will put them to rest.
Yes, definitely.
With CBN
and we see
selling at 1,021 naira to
Dangote
BDCs.
coming in with that surprise move today.
All right, thank you so much, Will, there for giving us the details from the markets. All right, let's get a sense of what's happening in Europe now. We see German engineering there for decades. That's used to be shorthand for high quality in machine building, whether it was turbines to autos, and still today engineering is one of the main drivers of the German economy. This week everyone with a stake in German engineering is meeting at the Hanover Messe, one of the world's largest trade shows for the sector. Let's talk to Lars Halter now. Lars, with DW, what's your first impression of this show?
Thanks for having me, Ladi. It's actually quite impressive how the trade show has changed over the years. Like you said, this event used to be all about big machines, turbines and such. It was all about how to build them and how big they can be built. And today it's all about how to build them cleaner and more sustainable. The green energy transition is playing a major role in Hanover, as is AI, of course. That is maybe the #1 topic these days. And it's also something that Chancellor Olaf Scholz tried out when he opened the event at the booth of German industrial giant Siemens. He tried to interact with a robotic arm operated by AI, and that went just about as well as you would imagine. Scholz wanted the machine to go faster. He said it a few times, and nothing happened. Well, eventually the thing sped up a bit, but it was all a bit underwhelming. Let's hope this won't become a symbol for this year's event, or even worse, for how Germany will fare in that sector in future.
All right, how is Germany doing in AI and engineering these days?
Well, engineering is still a solid business here. It's bringing in around 250 billion euros in revenues. That's actually up from 200 billion in 2020. So at first glance, all is peachy, but actually analysts are expecting a decline this year. And the question is always, of course, are we keeping up with other countries? Chancellor Scholz seems to know this, and he says he wants to work towards the country investing more in research and development, including by changing the rules on how the German retirement fund works. Scholz wants the government to be allowed to invest monies in that fund on the open market. That's more risky than traditional investment in government bonds, of course, but it could bring a better return on investment, and it could also direct more money to startups and other businesses who might need funding. He also wants to motivate Germany's most wealthy people to invest more actively. Don't know exactly how he wants to do that, but it would obviously be a great opportunity for them as well as for the industry, especially small and innovative companies in the fields of tech in general, but also AI in particular, can have a hard time sometimes having access to the capital they need, and any improvement here would certainly help.
And what are investors looking at in today's markets in Europe?
Well, here in Germany, we're in the midst of earnings season, and that as the DAX had some weaker days. It was doing a bit better yesterday to start of the week, and it's heading closer to 18,000 points again. Now, why is this important? Because 18,000 points is a pretty lofty level for the German stock market index. It is based on the assumption by many analysts that the country's top 40 companies, those that are listed in the DAX, will make more money in 2024 really than ever before. Record profits, record share price. The problem is, so far many companies haven't quite delivered what was expected. Software and cloud computing giant SAP actually did deliver last night, but some investors generally see the market on shaky ground anyway.
All right, thank you so much. That was Lars Holter giving us the details from Europe. Well, we'll take a quick break now. When we come back, we'll head straight to the commodities market update. All right, let's look at the commodities markets space now. We see rice, a widely consumed staple, constitutes about 8% of the food basket for the CPI, and is also significantly consumed during celebrations. Well, we've seen a bag of 50 kg rice that traded about 98,000 naira in December 2023. Recently, in April, we see the price per bag that's dropped to around 88,000 naira, and we've heard about further drops in some parts. Joining us now is Trevor Kumeka, Manager Economic Research at FDC. Great to have you on the show.
Good afternoon. Thank you very much for having me.
Right. So we're talking about prices of diesel, coming down. Now we're looking at rice. I've seen a trend going on right now. Do you think this is sustainable for rice?
Thank you very much. What you read is correct. In December 2023, rice was around 98,000 naira. Now we have about 88,000 naira. That's about 10.2% drop of a bag of rice. Yeah, the argument might be that factors affecting the price of rice could be local production level or global market conditions. But let's take a micro zoom to what's happening in the market. Recently, we noticed that there has been a shift in consumption of rice to noodles consumption by the young generation. And one will be wondering, what is the tie? Is noodle a substitute for rice? What is leading to those things? Noodles is easier to prepare. It's an end product because you don't need to consume noodles with any commodity. And you also, it's more convenient for mothers. The children are not concerned about the price, but the mothers, working mothers, are more concerned about their time. So it's quicker to prepare. So, but in terms of rice, if you compare that to rice, it takes longer time to prepare. And rice is a joint product with things like tomato and pepper and other stuff that you need to combine to consume your rice. So in that case, there has been an increase in tomatoes, pepper, and other things you combine with rice. The increase in the price of all those things is likely going to affect the demand for rice. So these are joint products. So as the price of one commodity increases, then we're likely going to see the demand for the complement products. So this is what is likely going to happen to rice. So in the near future, we're seeing a shift from the consumption of rice to noodles. If that continues, then the price of rice is obviously going to stay low, and demand
so I
for
guess
rice
this is because demand is dropping. I guess because demand is dropping, that's why we're seeing the price of rice. That's according to what you just told me. But we know Nigeria is the third highest importer of milled rice in the world. Import about 2 million metric tons of rice into the country. Why is Nigeria still, depending on imported rice?
Yeah, as of data available to us, local production of rice in Nigeria is about 7%. So we have a huge gap of 43%. So where did that gap come from? Where does it come from? We need to fill up that gap. The population of Nigeria is growing faster than what we produce. How do we feed the nation? What it means is that we're producing less than what we consume. So what happened? In the last 5 years, under the previous administration, when the borders were closed, the borders were not shut. What happened was that it was more expensive to import rice. So the cost of importing rice into the country was transferred to the final consumer. But now that the borders are open, we're going to be seeing a drop in oil in the price of rice, because the market is now open. The cost of importation will now reduce. The issue here is that with the border opening, there will be high competition because rice is now available in the market. One will ask, is the local producers, are they ready? Do they have the competitive ability to compete with global market players in rice production, like India, Vietnam, China, and the rest? If when the border was closed against importation of rice, if these local producers don't have the capacity to compete with foreign investors, global producers who have low average cost per production, there's going to be a problem in the economy. The price of rice will come down, but local producers will be affected because if they can't compete favorably with their global competitors, then it becomes a problem to domestic producers.
Okay, all right. We'll keep tracking the price there to see if we can see a further drop going forward. Thank you so much, Teva Kumeka, Manager, Economic Research at Financial Derivatives Company. Thank you.
Thank you for having me.
All right, let's get a check on other stories now. We see the quantity of second-hand clothes imported from China into Kenya. That's their main source of popular low-cost used clothing. That's jumped about 86% in the first quarter of this year, signaling increased demand. Data from Chinese authorities shows that the country exported about 31,000 tons of second-hand clothing and accessories to Kenya between January and March 2024, valued at about $22.73 million. And South Africans are paying significantly more on their bonds and to service their debts due to the South African Reserve Bank's interest rate hikes. This is the view of the economist Professor Bonke Demisa, who told the business desk that South Africa's high interest rates can be avoided. In November 2021, the SARB's Monetary Policy Committee initiated its current hiking cycle in a response to concerning uptick in the country's inflation rates. Take a listen.
I partly align myself with the sentiments expressed by Dr. Rulu Botha on the issue of the many repo rate hikes that the South African Reserve Bank's Monetary Policy Committee imposed on us when they raised the repo rate from 3.5% in October 2021 to its highest 8.25% by May 2023. Some of those repo rate hikes could have been avoided because they were totally unnecessary. In fact, they were counterproductive because the repo rate hikes or interest rate hikes were meant to be used to discourage widespread credit purchasing, because widespread credit purchasing is inflationary. So when people are buying a lot of things using credit, that increases the prices because there's higher demand for those goods when there's less money to pay for them. So the best way then to discourage that tendency is by increasing the repo rate or interest rates, and then people buy less on credit. But it was not the case in many of the instances where the repo rate was increased in South Africa over the past 3 years, because our repo rates were increased because of the attack on Ukraine by Russia, amongst other things, pushed up the prices of Brent crude oil. It moved from below $88 per barrel to close to $140 per barrel. And that had the negative consequence of pushing up our fuel prices in South Africa. And those prices went up not because people were buying more on credit, but because of the skyrocketing international Brent crude oil prices.
All right, now let's head on to another conversation. We see the e-commerce industry in Africa is forecast to surpass 500 million users by 2025, which will have shown a steady 17% compound annual growth rate of online consumers. Let's drill in on these numbers now. Join us is Wale Adisa, Chief Operations Officer at Omni Retail. Great to have you on the show.
Nice to be here, Ladi.
Right, quite an interesting forecast there we're seeing for the e-commerce users. But how's the e-commerce space faring, at this time, with countries dealing with, high inflation and high cost of living?
Interesting question. It depends. There are there's opportunities. The issues itself brings opportunities for us because what we do, as you know, is we stand between manufacturers and retailers and ensure that both parties get greatest value from that relationship. And so at this point in time, with the retailers requiring more support, with retailers requiring access to credit, with retailers requiring to work more closely with manufacturers, it's a perfect time for the B2B e-commerce players to play in the market. It's a great time.
All right, talk to me about the climate, in some African countries as a business climate. We've seen, some e-commerce platforms, exit Nigeria, in a couple of years now. But what do you think, is the problem? Why are they not, able to scale, in some countries in Africa?
So look, it's basically about the business model you operate with. So that different players have come into the space operating in different ways. Some players have been very asset heavy, coming into the space, buying vans, renting warehouses, and basically, spending a lot of money. Our approach has been a bit different. We've been very asset light. And the reason why is the retail space itself is a low margin space. And you've got to build your business in a way that you are able to partner and take advantage of the existing players. So we call ourselves a network of networks because we, whether it be warehousing or it be last mile delivery, or even in lending, because we do that, even in lending to retailers to buy more products. We partner with established banks, DFIs. We partner with established, with people who have vans, who want to do deliveries. We partner with people who have, warehousing space and are looking to plug into our ecosystem to generate value for themselves. And so I think that's really what's been happening. Prior, like a year ago, when there was a lot of capital chasing opportunities, you could afford to be not as efficient. And so what has happened is a lot of the players who have exited, because of their model, were not as capital efficient as when the external environment changed. And so that's, I think, is really the reason why. But for us, we've been profitable since, I think, end of last year, like November. So we think our model makes sense. I think we think it's the right one for Africa. And if you can do this in Nigeria, I think you can do it anywhere on the continent.
Right, quite interesting. Less capital chasing opportunities at this time. Thank you so much. It was great having you share your thoughts here. I was Wale Adisa, Chief Operations Officer at Omni Retail. Thank you so much.
Thank you very much, Ladi. It was a pleasure to be here.
Thank you. All right, now let's head straight to other markets. Now let's get a sense of what's happening in the crypto market. We did see Bitcoin, trying to get back up to levels seen before, but now we're seeing $66,188. That's for Bitcoin. Some green on the screen at this time, but it's mostly red right now. We see Ton there deep in the red. Solana still in green territory. So most of those cryptocurrencies that we saw, give up some of that profit. We're seeing them, try to inch back up, at this time. Let's get to our first conversation. Now we have Femi Adegolu. Now he's the CEO, founder of B-Chain Africa, joining me via Zoom. Great to have you on the show.
Thank you very much, Ladi. How are you doing today?
I'm doing great. We're seeing most countries at this time struggle when it comes to the currency market. We're seeing Zimbabwe coming up with gold-backed currency. We've seen Nigeria. We've seen the naira actually appreciate at this time. But we've seen some cryptocurrency exchanges being blamed for speculation against most of the currency. So how do you balance this? Are the cryptocurrency exchanges really the problem?
Definitely not the problem, right? A lot of these crypto exchanges are just service providers. They are providing a platform for people to do business, exchange their cryptocurrencies or Bitcoin and USDT for Naira. And this doesn't just happen in Nigeria alone because, for example, Binance, that has really been taking the hits, operates in a lot of countries, hundreds of countries around the world. So Nigeria is just one of them, and they have a large user base in Nigeria. But I think that it's actually a misplaced priority trying to blame a particular company for the downfall of our Naira. Nigeria is actually an import-driven economy, right? 90% of the things we use in Nigeria are imported. So if we're going to blame Binance, then there is no basis as to which why the executives are going to be detained. For me, that is being too ignorant. That's what I'm going to say. Being to ground, I think that the government should look out for how Binance and all those crypto exchanges should register in Nigeria and create jobs, and of course they can tax these companies. I think that's actually a smarter way to handle these issues. If the Naira is devaluing, of course it means that our imports are far greater than our exports. Thank you.
All right, but at this time, we do know, regulation is a major problem when it comes to, the cryptocurrency market and most of these exchanges. We know some of them do not play, according to the rules. Some of them, most of the platforms are being used for illegal, purposes at this time. But what kind of regulation do you think we should be exploring, right now when it comes to, these crypto exchanges?
Okay, like you see, Binance is registered in the US. I think it's also registered in some other countries as well. But I don't think there is anything like Binance Nigeria Limited or anything at all. So the first thing to regulate a particular market is to make sure that there are proper registrations with the Corporate Affairs Commission. That is step one. Then when you're registered here, they should have a physical office here, right? So that if there's any discrepancy between the government and the private sector, they can have some deliberations and everything can be trashed out immediately. I don't think the approach used by the government to track down and clamp down all crypto exchanges is actually the problem, because you can see today the Naira is actually going back to almost 1,300 Naira. So it is not, the blames being passed upon the crypto exchanges. I think the policymakers, especially the coordinating minister of the economy, Mr. Wale Edun, needs to look out for a scenario whereby we can have discussions with these private sector players. Sometimes it is not because even the platform knows about some of all these bad deals, right? But whatever happens, Nigerians are still going to use cryptocurrency whether they like it or not. Right, it has come to stay. So the government has to look at ways whereby they can come to sit down with the private sector players and the service providers and say, okay, yeah, we want to regulate this particular environment. Now, can we have a particular dialogue and see how we can, move this forward? Rather than trying to clamp down, I think Nigeria can easily make more money from profits, taxing these companies rather than telling them to leave the country.
All right. Talking about the Naira, we've seen the central bank intervening at this time, selling to BDCs about 1,021 Naira. So I guess markets might be expecting the Naira to strengthen, at this time. But thank you so much. Thank you, Femi Adegolu, CEO, founder, B-Chain Africa. Thank you so much.
Thank you very much.
That's the time we have right now. All right, that's the show today. Remember, you can visit channelscv.com for more updates. I'm Ladi Williams from Mini Team right here at Channels HQ. It's bye for now.